Vince Lanci is back on Reset next. It's the return of Vince Lanci. Thanks for being with me this Friday, Vince.
Nice to see you.
So gold seemed to finally get some sort of boost this Friday morning, Vince, thanks to the weaker than expected jobs numbers. What can you say overall on what's been happening on the gold front?
Well, I mean, the last week or so has just been devastating for commodities in general and gold specifically. Many people, including yourself, are questioning the market's perception of it as a safe haven anymore. But to speak directly about your the jobs number today. Today, in the big picture, I just view it as the jobs number came in weak and the market has been oversold. And so you probably had some weak shorts covering today. I wouldn't call it a turnaround event. I think in order for gold to have a sustainable rally from here, it has to base, consolidate, and you have to have multiple pieces of bullish information or bearish economic information. It's all about the Fed. Do we believe the Fed's going to continue to keep it easy, or tighten? That's what's going on.
So, Vince, does the lousy jobs report mean the end of QE talk?
It's the end of QE talk. Look, for the last month, everyone's been saying, they're going to, more hawkish statements have been coming out. No, I think if you see two or three more numbers like this, you see the talk reverse. And you see one of those word clouds, and the word inflation is not in there anymore, and the word is jobs again. And boom, there you have it. We're back to where we were. So,
I love your word clouds, Vince. So basically, you're saying if we see more lousy job reports, that means an extended QE is expected?
Yes. I think the evolution is the thing you're looking at from as a data person is this an aberration, this jobs report, or is this the beginning of a trend? That's what every trader looks at. So I'm of the opinion that's the beginning of a trend. So I'm going to look for the next one, and then I'm going to get bullish. And then I think that if it is beginning of a trend, Bernanke will stop. You'll stop hearing hawkish talk. You'll start hearing dovish talk to keep the stock market up. Gold would benefit, allegedly. And then you'll see an extended QE, and then maybe you'll see an increase in money. I think if Europe says we're going to print, the Fed's got to print. It's over then. So yes, you're right.
Vince, let's talk about those outflows that we're seeing on the ETF front right now on gold. We saw the world's largest gold-backed ETF, the Spider Gold Trust, suffer a setback earlier in this week. It saw its gold holdings fall by 4.2 tons. How substantial is the impact that we're seeing on the ETF side? Well,
the ETF is an equity version of gold. Just speaking about gold for a second, I think what you have is you have a genuine recommendation by banks to their equity clients to take their money out of non-interest rate bearing assets and put them into interest rate bearing assets. The thought behind the process being, if you want to hedge against inflation, sure, gold will do that for you. But why not own an apartment in Miami that's also earning you rent that you can raise the rent on? And an example of that, a real example of that, is real estate investment trusts or REITs. They're far overvalued relative to their cash flow. Ridiculous. And they're getting even more overvalued. So the question is, do you buy the dip or are you catching a knife in terms of gold? So this, to answer your question, this started with Basel III being pushed back. Then hedge funds got out. Then banks started recommending to rotate into dividend-bearing instruments, which meant money had to come out of commodities. And commodities in general have taken a hit for the same reason.
Vince, if we pull up the weekly gold chart now, what are you seeing right now?
We have two models looking at this market, and one says 1,400 and the other says 2,500. And I mentioned this to you before, maybe in the last interview. And when they diverge like that, instead of saying one of them is wrong, we want to say both are right. And we try and pick which one's first. So this was before we went from 16 down to 1560 or wherever we are at this very moment. But when you look at the chart, you'll see that we're back in the area we were last year, near the low of a big range, and we're back in the area where I remember drawing a couple circles saying this is where the strong hand was buying. And we're back in that area where those long wicks are in the weeks prior. So how does it handle those areas now? And I'm not confident it handles those areas well, simply because if I'm a central banker or a Chinese investor or a Chinese central bank, I bought it here before. I'm an investor. I want to buy it cheaper. Let everyone panic and then I'll buy it. So I wouldn't be so convinced that the buying will be there this time. And then I would be nervous below 15, 20 in that area. But once it does that, I think, and then you get the news that Europe's going to print. I think you'll see an orderly rally to 1850 and then 2200. That said, I'm not going to buy it all now. I will buy some between 15 and 15 and a quarter, and I will buy some if it gets into 1400 area underneath that.
Vince, when you're talking about $1,400 and $2,500 gold, that's the range you're looking at. Those are the two extremes.
Yeah, I am saying that, and that's not crazy. It's really not crazy when you look at how other things are moving. Gold to 1400 would be probably a massive, exciting event, but in reality, it's nothing. It's $100 compared to the moves that crude has had daily. It's nothing, and the gold market can't really absorb a bunch of wildebeest running in one direction and then running in the other direction because it's not as big as the oil market or the equity market. So the moves get exaggerated all the time. Right. So how exaggerated? I don't know. How deep is your pocket?
Everything is relative, Vince. And finally, my last topic, a fun one, Bitcoin. Should we care? And is it the next gold, as some people are suggesting?
It is the new thorn in the IMF's side. In an attempt to control or help governments create an international currency, the IMF has been trumped by the market, and that market is in the form of Bitcoin. Bitcoin is an electronic way to transfer money, and it is definitely now a big tool in the toolkit of foreign nationals looking to get their money out of pesos or pesetos and into into foreign accounts. For example, if you're worried about a socialist economy in Argentina, you take your pesos, you swap out for dollars, and through a series of questionable trust transactions, your money's gone if you're a wealthy Argentinian or Venezuelan. But now with Bitcoin, a step is taken away. But to answer, oh my God, is gold done? Well, no. It is easier to electronically get Bitcoin money outside of the country than it is to put bars on camels and go across the Kashmir Desert. But it's also easier to do that with dollars. So Bitcoin is going to be replacing paper currency, not specie or physical gold. So there are no Argentinians or Brazilians or Venezuelans exporting gold to the Cayman Islands and have changed their mind to Bitcoin. There are people doing it with dollars that are looking at Bitcoin now, and that's a fact, what I'm saying.
Vince, on that note, thanks for joining us today. We'll see you next week.
Thanks for having me.
And thanks for watching this edition of Reset. You can email us any comments or questions at newsfeedback@kitco.com or follow this conversation at Daniela Cambone. Thanks for watching.